There's a massive opportunity right now in Fortinet stock. Fortinet is a compounding machine that's grown revenue from $1 billion back in 2015 to almost $7 billion in 2025. That's 21% annualized growth over the past 10 years. So in today's video, I'm going to tell you everything you need to know about Fortinet stock as a long-term investor. We're going to go over Fortinet's business model, moat, and fundamentals. We'll also discuss Fortinet's future and investment risks. Make sure you stick around until the end to see my Fortinet stock valuation. So what actually is Fortinet? What's their business model? What do they do to produce almost $7 billion in annual revenue? Fortinet is one of the largest cybersecurity companies in the world, with a market cap of over $60 billion. They make money in two ways. First, they have their product segment, which includes the sale of FortiGate firewalls and other related network security hardware. Second, they have their services segment, which includes subscriptions for cloud-based security solutions. Fortinet's services segment is recurring, high margin, and increasingly becoming the growth engine of the business. But this is where things get really interesting. We're going to look at the three things that support Fortinet's moat and makes them a unique proposition for investors in the cybersecurity space. The first part of Fortinet's moat is their unified SASE offering. Secure Access Service Edge, or SASE, is a cloud-delivered framework that combines essential networking and security functions into one unified platform. Fortinet's sovereign SASE allows on-premise deployment, something no major competitor currently offers. This massively increases Fortinet's total addressable market by serving security-sensitive customers who can't use cloud-only SASE. The next pillar of Fortinet's moat is its custom ASICs. Fortinet uses custom silicone, creating a cost-performance advantage that's extremely hard to replicate. Fortinet's competitors, Palo Alto, CrowdStrike, and Checkpoint, all rely on general-purpose CPUs, therefore meaning Fortinet's hardware is faster, cheaper to run, and more power efficient. This is a huge structural advantage in an era of rising demand for enhanced and more thorough security. The final pillar of Fortinet's moat is their security fabric, which ties together dozens of products into a unified platform. This reduces vendor sprawl and increases switching costs. Competitors are converging towards this model, but Fortinet's breadth and integration depth remain ahead. Now let's take a look at Fortinet's fundamentals. You can see from this chart of Fortinet's revenue over the past 10 years that it is steadily and predictably compounded. Although the rate of growth has slowed from 21% over the past 10 years to just 14% in the past year, a decline in revenue growth can be concerning. However, it mostly shows the deceleration in growth of their hardware business, whilst their services segment is still growing at a consistent rate of around 15%. The hardware segment goes through upgrade cycles, similar to how Apple releases a new iPhone every year. Fortinet usually initiates an upgrade cycle every 5 years or so, and is currently in the middle of one. But now the real question is just how profitable is Fortinet's business. If we look at this chart, you can see Fortinet's gross, operating, and net margins over time. This is a highly profitable business with 80% gross margins and around 30% operating and net margins. This supports the thesis that their custom ASICs provide a real cost advantage because most cybersecurity companies cannot produce this level of profitability. These huge profit margins allow Fortinet to produce a ton of cash. We can see this by looking at a chart of the company's free cash flow. As you can see, over the past 10 years, Fortinet's grown its free cash flow from a mere $256 million to over $2.2 billion today. That's a 10x over the past 10 years. Outstanding growth. But what does Fortinet do with all of this cash? Does it pay a dividend, buy back shares, reinvest back into product development? Fortinet doesn't pay a dividend. Unfortunate for all you dividend investors. However, they do reinvest a significant portion of their cash into research and development to improve their product offering, around $800 million a year. And then there's buybacks. Fortinet has consistently bought back shares over the years, as you can see from this chart. And most notably, the company has increased the rate at which they buy back their shares from around 1.4% a year to over 3.5% a year today, suggesting the company's management team believe the stock is currently undervalued. As you can see from this chart of Fortinet's balance sheet, the company holds significant cash reserves of over $3.5 billion, with less than $500 million in debt, meaning Fortinet currently holds 7 times as much cash on hand as the company's overall debt burden. If it made financial sense, they could pay off all of the company's debt today. So that's the fundamentals out of the way. Now let's take a look at 4 catalysts for Fortinet stock. These are current or future events which signal potential upside for the company. First, we have Fortinet's hardware upgrade cycle, which we mentioned before. A major cohort of FortiGate appliances are hitting end of support in 2025-2026, creating a large time-bound upgrade wave. Analysts estimate this cycle could add $400 to $450 million in incremental product revenue over 2 years. This is one of the clearest, most quantifiable catalysts in the entire cybersecurity sector. The second catalyst for Fortinet stock is SASE and SSE adoption. Fortinet is gaining share in SASE by offering an integrated, lower-cost alternative to cloud-only vendors. This is only possible due to their custom ASICs, which differentiate them from the competition by providing significantly higher efficiency, meaning lower cost for clients, coupled with better performance. SASE is a subscription-heavy business, so every win expands Fortinet's recurring revenue base and reduces its reliance on hardware cycles. The third catalyst for Fortinet stock is AI-enhanced security features. Fortinet is embedding AI into threat detection, network analytics, and automated response. This isn't just a minor feature upgrade, it's a margin lever. AI reduces the need for manual tuning and increases the value of Fortinet's platform, which supports higher subscription pricing. And then the fourth and final catalyst for Fortinet stock is billings and guidance momentum. Recent beat and raise quarters and stronger 2026 billings outlook have supported the stock. This matters because billings lead revenue by several quarters, so upward revisions by management signal durable demand. Before I show you my Fortinet stock valuation, I want to highlight 3 risks around Fortinet stock. Firstly, Fortinet's hardware upgrade cycle is typically front-loaded. Roughly 40 to 50% of the 2025-2026 refresh cycle has already been completed, ahead of expectations. This pulls demand forward and reduces the remaining upside, which is why some analysts have turned cautious on the stock. The second problem is post-cycle product softness. Outside of the upgrade cycle, hardware revenue has been flat to negative, highlighting the risk of falling demand once the cycle ends. The third problem is intensifying competition in SASE. Cisco and Palo Alto are pushing aggressively into SASE, which could compress growth rates and pricing power. There's also the risk of Fortinet stock being caught up in the software sell-off. Despite having a physical hardware moat, investors could decide for whatever reason that Fortinet is an AI loser, with competition threats possibly emerging from OpenAI or Anthropic. On this risk, I personally think that we're a long way out from people and businesses trusting companies like OpenAI and Anthropic with their cybersecurity needs. Part of Fortinet's moat is the trust that they've built with their customers over years of service. That can't just be replaced with an AI cloud tool. So now it's time for the moment you've been waiting for. We're going to look at Fortinet stock's valuation. On a PE ratio basis, Fortinet stock currently trades at around 28 times their projected earnings in 2026. Not exactly cheap, but definitely not expensive. And then if we take a look at the free cash flow yield, which I prefer to focus on when valuing almost all companies that I analyze, we can see Fortinet currently trading at around 3.5%. Again, not super cheap, but definitely not expensive. You can see here as well that Fortinet's stock-based compensation isn't hugely significant compared to the company's free cash flow. Adjusting for stock-based comp, Fortinet trades at a free cash flow yield of over 3%. If we look at Fortinet's historic free cash flow yield, we can see that the company is trading at a pretty low valuation relative to what it's traded at in the past 5 years. However, if we take a look at Fortinet's free cash flow yield over the past 10 years, we see that the stock currently trades at quite a normal range. Although it's important to note that Fortinet's business has become significantly stronger over the past 10 years. So now we're going to switch over to the DCF calculator on Qualtrim to come up with some estimates of the potential return for Fortinet stock over the next 5 years. As mentioned, we'll use free cash flow rather than earnings to value this business. But first, we've got to come up with some assumptions of Fortinet's free cash flow per share growth over the next 5 years and the appropriate free cash flow yield for the stock to trade at. As you can see from this chart, Fortinet's free cash flow per share has steadily compounded at a rate of 20% over the past 5 years. This is actually a deceleration from the 26% growth over the past 10 years, with the 2-year growth at a rate of roughly 15%. In the past year, growth has accelerated back up to 19%, mainly due to their hardware upgrade cycle and increasing buybacks. I'm comfortable in assuming that Fortinet will grow free cash flow per share at a rate of around 15% per year over the next 5 years. And then in terms of free cash flow yield, I think it's appropriate for Fortinet stock to trade at around a 3% yield long term. With these quite conservative assumptions, Fortinet stock could compound at over 18% in the next 5 years, meaning the stock would go from around $80 per share today to over $190 per share in 2031. If you enjoyed this video, give it a like and subscribe to the channel so that you don't miss the next one. Also, click the next video for more.